Well, hey, I'm very excited to have our newest edition of the Real Estate Revealed. Going to dive into the topic of insurance today. So we're really excited to have our next guest with us. I've been doing it for a little bit, so I felt like they would be a good person to come in and just give some basics. So I'll let you go ahead and introduce yourself and talk to us a little bit about where you're at, how people can get in touch with you, and then we'll just kind of dive in.
Okay. Well, I'm Ian Phillips. I'm a State Farm agent in Ashland, Kentucky right here. And I've been with State Farm for about 13 years. Worked in Barbersville, West Virginia for about 11 of those. So finally got the opportunity to open up my own agency. And here we are ready to rock and roll. Contact information is 606-324-4159 is my phone number, or you could reach me at ian@ianphillipsinsurance.com.
All right. Well, sweet. Well, thank you. And, we'll just kind of dive right in. And like I said, I wanted to stay real high level, but, can
Sure.
you kind of explain exactly what home insurance typically covers?
Okay, so home insurance is going to be the protection against a sudden and accidental loss. So something like a windstorm comes through and tears your roof off, a fire, kitchen fire, theft, burglary, something like that. Home insurance is just in a high level talking point there. It's just sudden and accidental. As long as you keep that in mind, it's sudden and accidental, not something that's happened over time, not something that's a 40-year-old roof that starts leaking and those kind of things. It's something that is sudden and accidental. So like the windstorm we had last week or the week before, we had several claims from trees falling on people's houses. We had several claims of hail damage. We had a lot of roof damage claims. Those are things that the insurance is there to protect you for. A lot of people get that misconception about the things that take a little bit of time to work, like an old roof or a air conditioning unit that's 30 years old and those kind of things. So.
Okay. So I know with insurance, there's a lot of terms. they,
Yeah.
they kind of blend in, if you don't do this every day. So the average person, isn't seeing this. And I'd say they've probably got a decent concept, but can you kind of explain or define, premium, deductible, claims, things that, most people should know, or at least have a good idea of what it is?
So your premium is your annual cost for the protection, and a lot of times that's going to be escrowed into your mortgage. A lot of banks require you to do that as part of your house payment, so they make sure that it is paid. So that's your annual premium or monthly premium that you pay for that protection yearly. Obviously, that's something that they're going to make sure that you pay, or they're going to force place that on you.
Yeah.
That's where you want to make sure that you find a good company to give you the best rate possible. As far as deductible, that's one of the biggest ones that people they know they have a deductible, but they don't really know how that applies. To just keep it high level there, let's say you had a $10,000 claim, roof damage, and you had a $1,000 deductible. The insurance company is going to pay $9,000 of that claim, and you're responsible for $1,000 of that claim. The higher your deductible, the lower your premium. Okay, but the more responsibility you have in the event of a claim. Okay, and then of course the claim itself is when you have an actual damage that is something that you can report to the insurance company that you need help fixing. Something small like a broken window, it might be $300, $400, $500, and you have a $1,000, $2,000, $3,000 deductible. That's not necessarily going to be a claim. So you really don't want to report that to your insurance company, because you don't want to file something for less than your deductible. A lot of people confuse that, and that can actually cause some problems with your insurance company if you have a loss that's not covered due to your deductible. So.
Okay. So what are typically the standard coverages that most people would put on a home purchase?
Well, there are several different companies out there that do different things. At State Farm, we do replacement cost, and replacement cost it's, in my opinion, of course, I'm a little biased, but it's the best policy that you can buy. There are other type of policies that you can buy, like say if you had a rental house and you just wanted to cover it for dwelling fire, meaning that it just covers for fire, wind, and hail, but no theft coverage, no water loss coverage, and those kind of things. So there are different policies that you can buy. But if it were me and it were my home, I would want a replacement cost policy that's going to replace my home if it were to be completely destroyed, or had an upstairs toilet or bathtub overflow and do $20,000-$30,000 worth of damage to hardwood floors and drywall and those kind of things. I want to make sure that my insurance company is going to put me back to where I was before I had the loss. And that's really what we try to do.
So is maybe a good way to explain it that replacement cost is actually going to replace that house
Yes.
as it is, versus if you had something that was maybe a little bit less coverage, or that wasn't quite replacement, they're just going to do what needs to be done to replace or to take care of any money that's owed against it.
Yeah, pretty much. So, and I know this is one of the questions that we'll get to in a little bit, but a lot of the confusion that people have is the difference between replacement cost and actual cash value. Actual cash value is a depreciated cost. So if you have a 15-year-old roof that may have cost $20,000 new, they're going to depreciate that by 15 years if it's a 30-year lifespan on a roof. Whereas a replacement cost policy will not depreciate that cost. They're going to just replace the roof. So it's a little bit different, a little confusing when you get into that, but yeah, it's not just going to be paid what the cost of the damages are, but it's going to replace what you had.
So we kind of talked on this a little bit earlier with the fact that it's sudden as far as what coverage is, but are there any things that are not covered with home insurance that you find many people are really surprised to learn that that's not the case?
Yes. Mold and rot is one of the biggest things that happens that people are surprised when insurance companies won't pay for the damages there, because sometimes they can be hidden damages. And again, let's think about mold and rot. This is something that has happened over time. Okay, this isn't a sudden or accidental loss. Now, there are certain cases where the mold can be remediated because of maybe you were gone on vacation and you came back and that had already set in from a water leak or something like that. But if it's something that is over time, that's one of the biggest things that people, they don't understand that isn't something that's covered. Another thing too is an insurance company is not a warranty company, and that's a big misconception. Is that if you had an air conditioning unit, it was from 1990, it's an old Goodman unit or something like that, and it just quits. Okay, that's not something that the insurance company is responsible for. That is maintenance cost. That is something that maybe if you had a home warranty or something that would cover, but that isn't. Now, if it was struck by lightning and fried the panel or something like that, that is a covered peril. That is a covered loss. But just it going bad, just the unit going bad itself isn't something that's covered under insurance.
Okay. So are there any situations or circumstances that you find that it would be good for people to have an add-on or a rider, and you can kind of define what that is in regards to a policy, maybe a certain collection of something or something along that lines?
Definitely, yes. That is something that we take care of a lot for people. A lot of people have that gun collection that was passed down from their grandfather, or the jewelry that they've spent a lot of money on, that they want to make sure that they protect for all perils, for anything that happens to it. And a peril is basically a loss. Okay, so for example, if you had a diamond ring under your standard homeowners insurance policy, loss, meaning that the diamond just fell out, or you're at the beach and it just flies off your finger in the ocean. That is not typically a covered peril under a homeowner's policy. But if you get a rider, a personal articles policy that protects that diamond ring for all perils, that is something that's covered. I have even insured Beanie Babies back when they were big. People have had collections of stamps, have collections of beer cans. I've seen gun collections, horse saddles, art, a lot of things. Anything that is particularly important to you that you want to make sure it's covered for anything and everything that can happen to it, a rider for that is something that you should look into. Definitely for jewelry. I can't push that enough, that jewelry is one of the biggest losses because of just how fragile it is, with the diamonds and those kind of things that can just fall out. And that is not something that's covered under your homeowner's policy. It is something that you have to buy an extra policy for.
Okay. Well, cool. Now I want to kind of shift into pools.
Yeah.
How do pools affect someone's insurance? And are there any special things that they should keep in mind that they should have in place?
Sure.
And you can even get a little bit more specific if it's Kentucky or if it's West Virginia, if there's certain state laws in regards to what it has to be there. Plus, how does that affect their premiums and those kind of things?
So another misconception is that having a pool will make your insurance more expensive, and that's technically not true. It does go into the replacement cost value of the home itself. Of course, a pool is a big investment to put in with a house, and it costs a lot of money. And if the house were to burn, it gets so hot that it can mess up the concrete. It just really depends on what can happen to the pool. Normally, they're not going to be messed with as far as from a house fire, but the concrete can be messed with. It can be brittle and those kind of things. But the biggest thing is it will go into your replacement cost of your home, so we want to include that. But the biggest requirement, and I do all three states, Kentucky, West Virginia, and Ohio, and they're all pretty much the same. They do require a fence to go around the pool, and you want a fence because of liability. Because of the liability piece there, if somebody were to just come onto your property and take a dip in your pool and drown, you can be sued for that. If a kid were to do something like that, you want the privacy of the pool with a lockable gate or at least a closable gate. And that's something that the insurance company requires, at least a 4-foot fence. Some insurance companies require a 6-foot or different kind of things, but we do require a 4-foot fence around the pool. That is something that can be closed, not just an open gate. And we want to really look at your liability coverages that you have on your home. The typical homeowner's insurance policy will have a $100,000 liability limit, okay? And that protects your assets if you are sued due to your dog biting somebody falling on your property and getting hurt, somebody falling in your pool and getting hurt or drowning or something like that. It could be no fault of your own, but people can sue. And, that's one of the things that happen. And I would rather you use your insurance company's money for that liability piece than your own money. And I'm sure you would too. So look at your liability limits, especially if you have a pool or a lot of acreage, a lot of land. That's one of the big things too. People ride 4-wheelers in this part of the country a lot, and they don't care if it's your property or not. They're going to find a trail and they're going to go on that. And if they wreck and get hurt, that's one of the things your liability limits protect. And I would encourage you to look at what limit you have. We recommend at least $300,000 on liability on your homeowners, but we can go well above that, even including an umbrella policy up to $1 million or $2 million on an umbrella policy. So, but pools are one of those things that people really ask a lot of questions about.
Yeah. Okay. So I want to circle back a little bit. We talked about the replacement cost, and I think especially a lot of people that are going to be watching this are going to be people that are going to be buying a home or maybe even their first home and are looking for what to expect, so that way they know more, or better questions to ask you or their whenever they get in. So I think we've talked on this a couple different times, but can you talk a little bit more about the replacement cost? Because a lot of times in our market, we'll have properties that are maybe older and sell for a certain price, but then the replacement cost for that property actually gets into maybe even higher than what they purchased it for.
Sure. Yeah, and that happens a lot, especially if you're looking at the materials the house is made of, okay? If you have a solid brick home or a home that is sided with cedar siding or something that's more expensive to replace than, say, vinyl siding. If you have a large square foot house that just sells at a really great price for you, we want to make sure, again, with replacement cost, that we can tear down that old structure. If we had a total fire loss, we're going to have to tear it down, dig up the footers or the basement, haul all of that material to a hazardous waste dump. We can't just take it over to the Boyd County dump and throw it in the hole over there. We have to make sure that we dispose of that properly, and that's expensive. Pull any permits and pay any fees to the county or the city to get those things taken care of. Now we have a completely pristine piece of land to then rebuild your house. And if you have a house that has cedar siding on it and you like that look, you're going to get a house back with cedar siding. I want to say, if you have a $150,000 home that you purchased and you have $150,000 worth of insurance, by the time you get it torn down, pay the fees, pay the hazardous waste dump, you might only be able to build back a $105,000 home. So we want to make sure that we can replace that home with what you currently have. Same size square footage, same materials. Of course, we build it back to normal code, and you can use a contractor of your choice. We just paid for that to happen. But you want that amount of money. You want the ability to put you back into the home you had before you lost it. And that's a big key point there. And a lot of those things come into play, whether you have architectural shingles on your roof or comp shingles on your roof. What size ceilings you have. A lot of people have 8-foot ceilings. Some people have 12-foot ceilings. That can be a big big price increase on the replacement cost of that home. I used to work in Barbersville, West Virginia, and Huntington, downtown Huntington, had a lot of solid stone block homes that were selling for $50,000 and $60,000, and the replacement cost was coming back at $250,000, $230,000, because if we were going to rebuild that home the way it was originally built, it's going to cost us a lot. So now you do have a choice with that. You don't have to take 100% the value of that home. We can drop those to at least 80% or even lower than that, but you just have to understand what you're doing when you do that.
Okay. It's interesting. So I know all companies kind of handle things a little bit differently, but in regards to being able to get discounts on your policy, through whether that be alarm systems or different things of that nature, can you talk about, as a general rule, what are some things that clients or individuals can do at their own home to maybe get a discount or a reduction in some of those premiums and those kind of things?
Yeah, you said it, Ryan. The biggest thing is the alarm system. You can save a lot of money by having a full central alarm system, not just something on the doors and windows that beeps, but I'm saying something that calls the local police station, calls the local fire department, that you pay a monthly service fee, a local monitoring fee. That's one of the biggest discounts that we give for having that, because one, it helps us to mitigate our losses. If there's a fire, it automatically calls, and those kind of things. So that's one of the biggest things you can do. Another thing that you can look at is your deductible. If you're the type of person that wouldn't turn in a claim if it was a couple $1,000s, that you would, pay for it out of pocket and fix yourself, raise your deductible. That will lower your annual premiums. That's one of the biggest things that people, I've had people call me and say, I'm not going to turn that in. It's just $2,000. I'm going to go ahead and fix it myself. Well, they have $1,000 deductible. Why not raise that deductible a little bit if you're going to handle a claim small yourself? That's another big thing that you can manage your premiums with. But the biggest thing is the alarm systems. That's for sure. That's one of the biggest discounts that you can get. And I have one at my office and at home, and I wouldn't go without one.
Any way to get that off yourself as well, right?
That's right. That's right.
So do you feel like there's any common misconceptions? I think you talked on, or you definitely touched on the fact of the sudden earlier, but are there any other misconceptions about home insurance that you find that people typically have that we haven't already discussed?
Not really that we haven't already touched on.
Or maybe you just want to drill in and make sure that they understand.
Yeah. I want to drill this in. Flood insurance and home insurance are two separate things. Your home policy does not provide flood insurance. Okay. 99.9% of the time, if you're buying a house in a flood zone, the bank will tell you you need to have flood insurance as well. But we've had several people that have had floods, and they didn't have flood insurance, and they just assumed that their home insurance would cover when the creek backed up under their house and destroyed their HVAC unit and those kind of things. So that is something I really want to drill down. Another thing that I really want to talk about is some add-ons that you can put onto your policy. If you have a basement and you're on city sewer, please get the backup of sewer and drain. It is an endorsement that you can put on your policy that if the city or if your street has a backup and that nasty stuff flows and covers your basement, that's something that you want to add on to your policy. Not every policy comes with that. A lot do. A lot that I'll put it on a policy if I know they have a basement. And we'll talk about it and make sure that they understand that they have that on there. But that's two of the biggest things that we want to make sure people know is that flood is not covered under homeowners.
Yeah. Yeah, I think that's interesting because I think that sometimes people, I think that's a good point to bring out, because obviously if you owe money on it, the lender's not going to let you slide without having flood insurance.
Exactly. Sure.
If the house is paid off, or maybe you bought something and you fixed up and you don't owe any money on it, you may not have that flood insurance. So I think that's a nice, good disclaimer to make sure that people are aware of.
Right.
Well, great, man. Thank you very much for jumping on here today.
No problem.
If there's not anything if there's anything that we've missed, please feel free to jump in and make that. But I just, if you don't mind, go ahead and remind everybody who you are, how to get in touch with you. Again, thank you very much for jumping on. I think we've got some great information here. But if anybody have any additional questions, obviously feel free to reach out to me. Ian's going to provide his information as well, so they can reach out and get those questions answered that maybe we didn't touch on.
Yeah. Thank you for having me, Ron. I really appreciate it. Again, I'm Ian Phillips, State Farm agent in Ashland, Kentucky, 606-324-4159, or Ian at ianphillipsinsurance.com. And that is IAN. A lot of people put an E on there or something, or say Ian, but that's okay. It's Ian, IAN.
Great. Well, thank you very much, and we'll talk soon.
No problem. Thanks, Ron.